mean, listen, I feel like it's deja vu because we had this conversation with you a little over a year ago when you were trying to get on the board, and then you decided not to. And they're saying the same thing they said then, too, which is they question the relevant experience that you have in terms of the entertainment media business and why you would add anything. They, of course, say that they have an incredibly well-stocked board of people who are fully capable of holding the management team accountable. And again, what's the plan? Like, other than saying they got to do better, what's the plan?
Great. Right now, go ahead.
Yeah, I just want to say, I mean, you might think you're like attacking the CNBC guy, but I actually think he's really playing up to Peltz because he's just parroting what
I want to make it clear.
He's parroting Disney. Yeah,
I'm not talking about what a dumb comment by him. That was softball right down the middle.
Yeah.
Yeah. I wasn't talking about you, Ron. I was just like in general. But
I agree.
But I actually like that he's playing this up for Peltz because he's just parroting what Disney's talking points are and is allowing Peltz to just absolutely pummel them.
Yeah. Yeah, no, it was a question that Peltz, I'm sure, was incredibly appreciative of. So, which he even says on a later question.
Yeah.
I don't know if it was this one or the later one where he says, "Thanks, that's a great question. I'm so glad you asked me." I think that one. I don't know if that's this one or it's coming up.
David, you asked it just like I wanted you to. I mean, as written. First of all,
as written,
from Bob,
this is the question I gave.
Every independent director has underperformed the S&P on every measure. 1 year.
There's the legacy.
3 years, 5 years, 10 years. How much more do we have to go? How long do we have to continue to suffer with this great board?
I love that line. It went over everybody's heads. They're talking about, they got on board. They got all these great people on their entertainment experience. It's like, how long do we have to suffer with this great board? It's like that was one of my favorite lines of the interview. By
the way, they said I have no media experience. I don't claim to have any. But I would tell you, I don't think they have much media experience. They broke a record this year. You know that the last 5 movies in a row were losers.
Do you think he's watching some YouTube videos? I want to stop real quick because I want to point to this chart. Gentlemen, chime in with some comments after this. We'll take this break. What they're showing is they had this ready to go because he's talking about how Disney has underperformed the S&P. The S&P 500, just to clarify for everybody watching, it's one of the 2 big indexes that are out there. The Dow Jones and the S&P most frequently cited. Of course, the NASDAQ is out there, which is the third big one. But the S&P more often is used as the most common benchmark, the most common market benchmark used for every mutual fund, at least in terms of equity mutual funds, is the S&P. The S&P is basically it's the 500 largest publicly traded companies. It's a large cap index, both growth and value embedded in there. So they're comparing Disney to the overall most popular, most cited broad market index that exists. Okay. And the chart speaks for itself. You look at what's happened with Disney, you look at where Disney is now, you look at where the S&P is now. I mean, Disney is much closer to that little zero mark over the last 10 years where the S&P is up 160-ish.
And they saved this chart. They were showing in the beginning that, hey, look at Disney. Look, it had a little bit of a dip, but look how nicely it's recovered. What's the then boom.
Yeah.
This is where the action is, because as you've heard me say this so many times, Valiant, ROI, you can't just look at the stock price. You have to ask yourself, what is that money doing for you? And again, this whole thing with the studios, break even. You don't get awards for break even when you've spent $250,000 on a capital project.
That's it. Yeah, you don't spend that much money to break even. Nobody does that.
And
nobody.
That mountainous blue peak. Who was the CEO during that time?
I think that's when Chapek was floating around in there.
Oh yeah,
and I realized
that was the Bob Iger sabbatical, I believe.
Yes, or right around that time. And I realized, look, there was a lot of exuberance. Understandably, that was a market force, just like it drove Netflix around the same time to like $700, almost $800 a share. The same time that Disney was $200 a share, and that was because there was that expectation in 21, especially following the massive year that streamers and all the internet-based companies and services and things like that that followed after what happened in 2020. We saw that with, lots of internet-based communications and things like that, internet-based streaming, entertainment, online entertainment. All of that went through the ceiling. Look at what happened to a lot of people's YouTube channels in 2020 and 2021. This is why they had a lot of that bump there too. But since then, they haven't. And this is the key: they haven't been able to follow through on it. Not even close. And to be fair, Netflix fell back with Disney around that same time. Netflix had a similar pattern, although not as pronounced, I would say, but very similar. But Netflix has basically backed it up since then. Netflix is doing really well right now, and you can see it reflected in the stock price. Disney just continues to trend downward. It might meet a little bit of support and then resistance and bang around in a certain range. Right now, it seems to be 85 to 95. It's going to bang around in there, and it's probably going to sit in there unless and until something major develops with them, especially with the stockholder meeting coming up, which, again, is also why Bob Iger at that stockholder meeting, like we said before, is going to be very desperate to put out as much positive news as he possibly can and probably announce a lot of big things there, which may or may not ever come to fruition, but
I feel like every kind of time Bob Iger's doing any kind of public speaking now, he's sticking his foot in his mouth and creating more of a problem for the company than he is putting out fires or making any kind of beneficial talking points or anything like that. Well, I mean, just look at the what was it, the New York Times book post or whatever it was called, where he got savaged by Elon.
Yeah, Deal Book.
Yeah, the Deal Book Summit. Yeah.
Yeah, exactly.
Isn't it interesting that if you look at this chart, that from 14 until 22, let's say, the Disney stock largely followed the same trend as the overall stock market.
Mm-hmm.
And sure, from 2019 to 2020, Disney outperformed. From 21 to almost 22, it outperformed, and sometimes it underperformed. But not until Disney decided to become a political partisan corporation under the direction of Bob Iger, not until it ousted Bob Chapek, did it begin to go in the opposite direction, to fork away, F-O-R-K, folks, fork away from the stock market in general.
Mm-hmm.
And that is what has caused the greatest damage, I think, to Bob Iger right now, is that he was supposed to be the mouse messiah. And the assumption, I think, was that Disney was so big and so important in the culture that it would continue to follow the stock market. And so Bob Iger could ride this out, this little, he could come in on the downswing that he created through the shadow campaign, and then the stock would pick back up again. That hasn't happened.
No, and I was going to say here, let me show you right here. You see where we're getting into this trough between 22 and 23? So right here, late 2022, this spike, that's where Bob Iger came back, basically. And the thought was, oh, everything will get better, right? Streaming is streaming. And Bob Chapek didn't start the streaming. That was Bob Iger, right? Bob Iger comes back.
Cut off and then, $1 billion revenue stream from Netflix.
Yeah. Look how quickly the paint came off of that turd. From the time he came back within a month or two, it went right back down, and now we're actually lower than where it was. It actually dropped lower than the lowest point that Chapek was there. It's not even quite back to that point yet. It's close, but the point is that bringing Bob Iger back has done literally nothing, effectively. It's done nothing.
It's done the main thing that was intended, which was to make him wealthier and get him back into that office with the shower with no challenges whatsoever.
It had a Mickey loofah. You can't blame him.
The Mickey loofah. Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.